we can start layering on what these levels mean by labeling them, right? For example, the 0.618 retrace is a higher low as a critical level that must hold. If it does not, we may see price action below here. Welcome back to another journey with the Crypto Foundation. Today is part 2 of analyzing the Solana chart. In our last video, we asked the following questions. Before we move on, let's recap the structure of our Solana chart here and build the consolidation area represented by the boxes we spoke about in the last video. It might give the viewer a bit more clarity in how we're looking at this. Okay, let's first layer on the red box. Okay, this is representative of our current resistance, meaning that every time price is going to go up against this bottom of the red box here, it's going to act as resistance, right? All of this price action here, here, and here essentially serve as resistance. We've added another more precise supply zone specifically right for this area here, small distribution area. Then we can add our, as we saw in the last video, area of support, which is the orange box. Then we can add a more detailed area of support within that orange box, which is this darker orange box. In the previous video, that was a green box. And then we can add the last area of support. And then we can then start layering different small consolidation zones below. Here being one, another being right here, because we had price action rally against here, meet resistance, come back down, and then break out from this area. Some people may know this as a cup and handle pattern. So there is a area there of support now, which was previous resistance is support. And then just generally this whole area as demand or deep value. Okay, and we'll layer our Fibonacci retracement, which is the overall move, okay, from the low to the high. What we have here is the 0.50 Fibonacci level, and more importantly, the 0.618, where actually the weekly candles closed above. Then we can start layering on what these levels mean by labeling them, right? For example, the 0.618 retrace is a higher low as a critical level that must hold. If it does not, we may see price action below here. Okay, so let's dig in and find out what happens now. So we're going to zoom in. In our last video, what we mentioned was price action had broken the bottom of the red box not once, but twice, and a third time being a higher probability into entering this orange box. In this video, we'll discuss what does this darker orange box here mean for us and what now. Okay, right now we can see the weekly candle is, the body of the candle is just above that orange box, okay? This essentially gives us some type of reference or point of reference to know where price is going. Instead of just having nothing, if we remove all our drawings, you know, you may identify that this is a potential higher low or maybe some other sort of market structure. However, we've drawn a more detailed view using our boxes, using the resistance and support areas, okay? Okay, so when price followed through and broke down from the red box into the orange box for the third time, that was the sign that we will likely spend time in this orange box, especially if we start closing red candles into and below the top of the orange box. What we want to watch out for is essentially weekly candles to close below the top of this box, the top of the orange box, okay? Now we can see that the next level of support is the top of this darker orange box where the body of the candle is currently resting, okay? And if candles are closing within the larger orange box, there's a good probability that we will enter and break this inner orange box, and price action will start making its way down into this area all the way until the lower boundaries of both of these boxes, one being here at 1179 and then one being a bit below that, which is represented by the inner red box. So one is the main orange box, right? We go from 1658 down to approximately 79 cents, and then the inner box, which is the current price, trading around 1470, down all the way to the bottom of that orange box at 1088. Okay, that is likely, or at least our higher probability chance where price action will continue and start consolidating to that area. Now, The next area of support is going to be this purple box at the bottom. It was once respected with this wick here. It was also where price capitulated through, but the bodies of the candles closed in this area. If we remove the clouds and just look at price action, we can see that our lowest point for what we have based on previous support here, right, based on previous market participants buying up Solana and creating this consolidation, what we can expect is if price does enter through here, that it should be supported as a higher low, either at about 10, the bottom of the orange box, which is $10 and change, or right here, which is about 980, right where the bodies of the candles formed on a weekly chart. This is why it's important to look at a higher time frame. What else do we have in this area? We have our 0.618 Fibonacci retracement, okay? So we have the confluence of the 618 and a higher low within this box. Personally, what we're looking to do is accumulate in this area right here. Now you may ask, well, what if it breaks any lower than 0.618? It's a good question. We should be aware of our downside below. If we switch to the monthly chart, we can see that potential downside can go all the way to these other zones, this small blue zone over here, and also the green box over here at the top of the green box. The 618, it's about a 48% risk, meaning that if there was a DCA strategy all the way down to the 618, then the downside from there is 48% from the 0.618 at $9.80 down to about $5, 48% downside, okay? Now the issue with worrying about the downside here is that every time charts are at the bottom of, or what we may know is the bottom, right? So for example, if price stopped here at the 0.618 on the retrace and then came down again and tested this area, we're all going to be fearing that it's going to go lower. One universal law is that as price gets low here, it's much more likely or perceived in our heads that price will keep continuing down, okay? Just as it is at the top of the market when price gets up to here, everyone's expecting more and more. And if it gets to this area, a lot more people come in to buy because there's confirmation. And so they're looking to buy here, they buy the top. The same thing happens here. As it gets down to low, everyone thinks it's going to keep going down. And it could, but as the further you get down, the less that you can rely on your perception that it's going to get there. And if price does get to the 618 and starts closing weekly and especially monthly candles above the 618, then you have further evidence that support could have formed, or a potential bottom could have formed in these areas here and here. And that would be a low and a higher low. Now, if price starts closing on the weekly and especially the monthly below the 618 for multiple weeks or 1 or 2 months, or even especially 3 months below the 618, then there's a higher probability that price will shake out holders to this blue box, which is around $6 and change. And if that doesn't hold, if that's not just a wick and up, it's likely going to go and test the top of this area. But you don't want to worry about that potential future, because that's fear, from this point. You have to let this structure play out. And based on the chart and how that chart is developing, could start weighing the higher probability of where price action could go. And if it gets to this area and closes below it, you could expect more FUD or negative news in the media, which price action will be here first, and then you'll see the negative news in the media that allows price to go further and test this area, creating a whole new low and a massive new capitulation, which again, we don't want to worry about, because what we know about fear in our minds is that as price gets down to this area, the more it gets down, the more we believe that this area is possible. But in reality, we just need to see what happens to the chart. Let the chart tell us the story. I'd like to just come to Altcoin Daily's Twitter. He had a very interesting tweet here when he described, everyone said they would love to buy Link 85% or more down. Now that has happened, they're instead paralyzed from fear. It kind of goes to what we've already discussed, and you can replace Link with any project here. Obviously, the strength of the project will have a difference, right? The charts are the first point of our assessment, or the first place we want to look at. But if you're looking at a terrible project, then you could see that maybe never make a test at new highs or previous highs ever again. The reason why we analyze Solana is because it still has strong metrics with developers, with investments, with building out infrastructure and utility. That is important. If you like the content, make sure to subscribe to the channel and hit the like button to not miss the next video in the series analyzing Solana.